expect to see volatility in gold and oil markets for a little while. And that is because, very simply, one, we've got a recovering economy. As the economy recovers, demand in oil will fluctuate. Demand in oil, because that does fuel the economy when people need oil to transport goods. It really is, as we start doing more things until we go to a fully renewable energy source, we consume oil and the whole globe consumes it. With a recovering economy, you will see volatility in the oil markets as demand goes up and down. We will also, we're talking about gold markets. Interest rates are so important right now. Everyone's focused on interest rates and inflation, and gold is a proxy for those numbers. And so Chris will talk about the fundamentals of those as our keynote at the end of the day. So there was a method to the madness why we are talking about gold and oil markets now, because I think you're going to see volatility in them going forward for quite a while. So let's get into day trading gold and oil markets with binary options. Before I talk about it, you're going to see this slide several times throughout the day, and it is a disclaimer because the entire day is brought to you by our compliance department. And in this disclaimer, trading involves risk and may not be appropriate for everyone. Any trading decisions you make are solely your responsibility and at your own risk. And this is a day of education. We are doing this for your education purposes. Please do not construe anything I say or any of the speakers today say as a buy or sell recommendation. All right, we're doing this for your education purposes. Now, as for this particular session, what are we going to cover? We have got literally thousands of people, most of whom are brand new to Nadex and aren't familiar with even who Nadex is. So I'm going to spend a couple of minutes just talking about who Nadex is, and then we're going to talk about binary options. What are these things? I'm going to define them for you, how they work, understanding how the price of a binary option changes. What are you actually trading when you trade a binary option, and how will that price fluctuate over time? And at Nadex, we do something that is distinctly different than any of the other binary option providers out there, and we're actually going to talk about them a little bit, is that we give you a variety of choices. And you'll understand that when we get there. And then I am going to do a practical demonstration. I want to show you the Nadex platform and show you how easy and intuitive it is to use to access the gold and oil markets. Okay, now let's talk about it. Who is Nadex? Nadex is actually an acronym, as are most of the terms in the financial services industry. We love our acronyms. And it stands for North American Derivatives Exchange. All right, that's as easy as that. And we are a regulated exchange. Now, there's another acronym in there, CFTC. We are regulated by the Commodity Future Trade Commission. The reason I mention this, and particularly when it comes to binary options, is there are only a couple of properly regulated binary option exchanges in the United States. Right? And I believe we're the only one that has any volume at the moment, or very near it. So it's safe to say that Nadex is the premier binary options, regulated binary options exchange in the United States. Now, the reason I emphasize regulated is people can access other binary option providers out there on the internet that are offshore. I think you need to block your browser and use because they're not legal in the United States, over the internet, you certainly can access them if you really had the technological wherewithal and you wanted to. But when it comes to an unregulated binary option provider, I would say this, caveat emptor, buyer beware. When you are dealing with a non-regulated entity, if you were to have a challenge, a problem, or wanted some type of recourse, good luck. Because we are regulated by the Commodity Future Trade Commission, it is the same regulator that regulates The CME, the Chicago Mercantile Exchange, the same regulator that regulates ICE, the Intercontinental Exchange, who owns the New York Stock Exchange, we have to adhere to all the rules, laws, and principles of the United States. And we have oversight by a regulatory body. So when you hear about challenges in the binary option space, about funding your account or getting money out of your account, that simply does not apply to Nadex. We have rules, regulations, and we have government oversight. You can access Nadex from outside the United States. There are certain countries around the globe. We have a list on our website. So you can trade from outside the United States, but we are regulated. And I think the only other operating regulated binary options exchange right now in the United States is a little weather one. I'm not even sure they do any volume. So it's really important to understand that we are regulated. I can't emphasize that enough. That being said, this is why people come to Nadex, and this is why you are here, is because we design contracts specifically for retail traders. Now, what does that mean? We've got small notional value contracts. They have a very low dollar amount, a very low cost of entry. You do not need thousands of dollars to access Nadex markets. You can do so with hundreds of dollars. And all of our contracts, all of them, have clearly defined risk. You know exactly what you could get into before you enter a trade. You know what your potential risk is, you know what your potential reward is. So when you hear about things when people trade other futures products where somebody gets blown up because they had a margin call and something really terrible happened to them that they hadn't expected, at Nadex, we've got very small contracts designed specifically for retail traders with defined risk baked into them, all right, so that there are no surprises. And that's actually really important too, particularly for new traders. And people come to Nadex, they trade binary options looking for short-term price action. Short-term price action. Now, we do have call spreads and knockouts, which my colleague Dan Cook is going to get into at the very next session, which is another really cool way to access the markets. I am going to keep moving along because I want to get into this. What is a binary option? And I know that I think there's some confusion around what binary options are, and I want to make it really straightforward for you to understand what they are and how you can use them to access gold and oil markets. Now, it's interestingly enough, we also have you can trade equity indices, foreign exchange. I mean, there's other markets that are available to trade at Nadex, but because of what's going on in the economy, what's going on with interest rates, we really thought it would be great to have some sessions and really focus around gold and oil today. So a binary option is a short-term defined risk reward contract. And that contract is made of three components. It's a prediction. It is a prediction, and the three components of it are an underlying market, a condition, and an expiration time. Now let's go through those. An underlying market. I am going to, just for the slideshow presentation, as an example, I am going to use oil. So we have an underlying market, oil. Then there's a condition, and that will sometimes be referred to as a strike price or a level. And that condition is oil going to be above? And then there's going to be a strike price, and we give a variety of strike prices. So will the price of oil, the underlying market, be above $64 a barrel? Okay, so that's the condition at expiration time, at a certain time. And we've got a variety of expiration times, something that makes us very distinctly different than other binary option providers. We offer a variety of markets. We give you a variety of conditions. So you won't just see, is it going to be above $64 a barrel? Is it going to be above $60 a barrel? Is it going to be above $62 a barrel? Is it going to be above $64 a barrel? Is it going to be above $66 a barrel? You're going to get to choose which level that you would like to trade around. And then there's going to be a time frame. In the next 2 hours, by the end of today, at the end of the week. So we give you some choices. Now, I know that confuses some people, but there's a reason why we do that. There's a reason why we do that, because some people want very, very short term. Some people want a little bit medium term action. And the price of that binary option, the way it moves, will vary based upon the condition, the market, the condition you choose, and the time frame. And we are going to go through examples specifically so you can understand that. Now, interestingly enough, something else that differentiates Nadex from other binary option providers is you can both buy or sell these predictions. You can say, yes, I think it's going to be above $64 a barrel, or you can sell it and say, no, I do not think it's going to be above $64 a barrel. You have a choice. It's not just buy, you can also sell, and that is actually going to be absolutely critical. So hang on, because at the end of the slide deck presentation, there is hopefully a catharsis moment for you, an aha moment in understanding how you can use binary options to trade the gold and oil markets. So with a binary option, short-term risk reward, a market, a condition, and expiration time. Will oil be above $64 a barrel at the end of the day? And it doesn't matter whether you're buying or whether you're selling, your risk and reward are both defined and known quantities before you place the trade, and we calculate that for you. Right? Now, a binary option will trade between 0 and 100. Now let's talk about that 0 and 100. All right. A binary option is a prediction, as I mentioned. It's either a true or false prediction. Either the event happens, oil settles above $64 a barrel, not trades above, but settles above $64 a barrel, or it does not. And it's either yes or no, true or false. And if it's true, the option will settle at 100. It will go to 100. And I'm going to talk about that 100 in a second. If it's false, the option will go to 0. That is why it's a binary option, because in the end, there are only two potential outcomes. It is either yes, true, it goes to 100, or no, false, it goes to 0. Now, when we look at that number, what are we really trading? And you can think the price of the binary option can roughly be thought as reflecting the probability of the event being true, of the event occurring as determined by the marketplace. So let's talk about that a little bit. If oil were trading exactly at $64 a barrel, and you were looking at a binary option that had 64 as the condition, as the price, as the level, is oil going to be above $64 at the end of the day? And it's currently right at $64. There's an equal probability, an equal likelihood that it would settle above 64 or at 64 or below. It's a 50-50 proposition. You would expect the binary option to be trading around 50, as that moment in time, there's a 50% chance of it being true and a 50% chance of it being false. That is what you're trading. And that is determined by the marketplace. And our marketplace is made up of thousands of traders, a bunch who are looking to buy, a bunch who are looking to sell, and eventually you get a market. It's a central limit order book, and I'm going to discuss that when I get over to the platform part of this presentation. And similar to trading other options, if you've traded other equity options, for instance, or any options, in the probability, in the price of that option, time to expiration and volatility will be a factor. And when I walk through some examples, you will understand why time to expiration and volatility should be factored in or will be factored into the price of that binary option. Now, next, I want to talk about that 100 another way. And this is actually kind of cool. We know it's going to trade between 0 and 100, and at the end, it's either going to settle at 100, it's true, or it's going to settle at 0, it's false. We also made all of our binary options have $100 total value per contract. So not only is it the probability of the option finishing in the money, it is also the dollar value of the contract. So now we do the math for you, but it certainly makes things a lot easier. So in the end, one binary option will either settle at $100 because it's true, or it will settle at $0 because it's false. And as I mentioned, you can either buy or sell them. And the way it works is your collateral, your cost to do the trade, is the maximum risk that you put on. So if you buy a binary option, let's say you buy one at 30, okay? You buy a binary option at 30. At that moment in time, the market is saying there's only a 30% chance that it'll finish in the money and go to $100. But the market moves around, but there's a 30% chance at that moment in time. If you buy one at 30, there's a 30% chance, according to the market, that it will go to 100. That's the most that you can lose. If it is false and it goes to zero, you put up your $30. You cannot lose any more than the $30 that you put in. Now, I put in $30, you buy one, and you're risking 30. And what could you potentially make? It could go to 100. You could potentially make 70. So you're risking 30 to potentially make 70, because in the end, if it either goes to 100 or zero, it goes from 30 to 100, you make 70. It goes from 30 to zero, you lost 30. You can sell these as well. If I sold a binary option at 60, all right, there's a 60% chance it's going to go to 100. All right, if I sell it at 60 and it goes to 100, all right, I would lose $40. All right, I sold it at 60, it went to 100, I lose 40. But if I sell it at 60 and it goes to zero, I could potentially make 60. So just like you can buy or you can sell, your risk reward is known before you place the trade. We calculate it for you on the order ticket. I am going to show that to you, but you can buy them and think it's going to 100. You can sell them because you think it's going to go to zero. You would buy it if you think the statement is going to be true and is going to settle in the money and go to 100. You would sell it because you think it's going to be false. It's not going to happen. It's not going to settle above that level, and it will settle at zero. Okay, so that is the risk reward of binary options. I do want to quickly walk through an order ticket because we do make it pretty straightforward for you. Here's an example of crude oil. At the time, it was trading just above $62 a barrel. And the binary option, will oil finish higher than 62 and a quarter, 62.25 at 2:30 p.m. And if you notice in the upper right-hand corner, this was a weekly contract. It had 4 days to get there, okay, or to settle above there. Now, in 4 days, oil might move all over the place. I'm going to walk through some examples in a moment. Also on the order ticket, there are bids and there are offers. And in the upper, well, let's just talk about those. The bid, the sell side, is where I could sell it, right? If I thought, no, it's not going to finish above 62 and a quarter, I could sell it at 46.75. If I thought, yes, it is going to settle above 62 and a quarter, I could buy it at 49.75. Now, do I have to trade on those markets? Do I have to trade on them? And the answer is no. I am allowed to trade, or at least try to trade between the bid-ask spread. Will I get filled? Will I definitely? Not necessarily. This is a limit order, but I can put a bid between the bid and the offer. And if I did that, my 48 bid would be represented, and that sell would now say 48 underneath it. We have what is called a central limit order book. Anyone could put bids in, anyone could put offers in. You could put a bid below the market. You could put an offer above the market. You can put a bid or an offer in between the market, and you can advertise the price that you want to trade. And if somebody else wants to trade with you, you'll have a trade. All right, so if I wanted to buy one at 48 and someone else then came in, if I put my one lot up there, somebody else might come in and say, I'll sell one at 48. All right, that's how a trade occurs. All right, and notice at the bottom, we always calculate your maximum potential profit or loss, excluding exchange fees, excluding fees. We do calculate, so if I actually bought one at 48, that would be my risk. I couldn't lose more than 48. And if it settles above 62 and a quarter, and it is true and goes to 100, I could potentially make $52. Okay? That is our order ticket. Now, some people do ask, what are those numbers up in the corner in the buy or sell? That is actually how many are bid for. So we have a 50 and a 70. There's 50 of them bid for. There's 70 of them offered. We do show market depth. So if you were to put bids below, you would see your bids below. If you were to put offers above, you would see your offers above. All right, that's the order ticket. Now let's talk about, I mentioned we were going to talk about volatility, price and time, how they impact the price of a binary option. Because it's a probability that the event is going to be true, that probability is going to fluctuate. It's going to fluctuate, and it's going to fluctuate differently in high volatility environments or as time moves on, particularly as you get very, very close to expiration. The probabilities can move all over the place. And the price of the binary option does not necessarily have to move in line with the underlying market. Now that sounds a little counterintuitive, but I'm going to show you why. So let's walk through some examples, and I'm going to move through these examples pretty quickly because then I do want to spend a little bit of time on the platform playing Show Me, and I want you to be able to see it. So here's a chart of crude oil, and the question was, and the binary option was, will crude oil finish greater than 62 and a quarter at 230? And there's the chart, and it goes up and down, and there's the level, the 62 and a quarter. Now, early in the day, let's just assume this was over the course of one day. Early in the day, oil was trading above 62 and a quarter dollars a barrel, and the binary option was trading, and if you look, the bid ask 54.58, so I'm going to use the middle number. That would be the easiest probability. The market was saying there's about a 56% probability that it will settle at expiration in the money and go to 100. Now, it's doing that because it's currently trading above 62. So it's already slightly in the money, but there's still a long time left in the day. Early in the day, oil made a dip down and the probability dropped below 50%. It dropped down to a 44%. Now, why is there still a 44% chance? That's because there's a long time for this to still move around. That impact of time, there's time for this to settle above 62 and a quarter, and anywhere above 62 and a quarter, it finishes in the money. So it only dropped down to 44%. Now skip forward to the middle of the day and it decayed. All right, this is the effect of time decay. The price is about the same. It's still below 62 and a quarter, but because there's so much less time left in the day, the binary option decayed down to 36%. Right? It dropped to 36. Now, moving into the end of the day, you see how the swings in the probabilities get much more dramatic as we get closer to expiration. Here, it popped back up above the 62 and a quarter level, and now we're all the way up at a 74% probability because it's late in the day and it's above. And it does make a move. All right, it moved down and it really tanked. It dropped all the way down to 24. Now, this binary option, remember, it's either going to go to 100 or it's going to go to 0. If it finishes right at 62 and a quarter or below, it goes to 0. Now, in this instance, it did go above, but anywhere above 62 and a quarter, it would have gone to 100. And it doesn't matter how far above 62 and a quarter. It could have gone to 68, 69. The binary option is only worth a maximum of 100. And if you wanted more risk, and if you had a stronger opinion about whether it's going to finish above or below, you could control that risk by trading more than one contract. Right? And that's how you can manage your risk, as we've designed these very, very small contracts, and others can if they wanted to risk more, they can trade more contracts. Now, I want to quickly walk through a low volatility environment just so you can see it, because I do want to have plenty of time to discuss this on the platform so you can see it. But here's an instance where there is no volatility. volatility is low. Crude oil, will it be greater than 62.25? And you can see throughout the day, it never gets above 62.25. But early in the day, it was worth $44. Now, notice it goes on to the midday, and it drops down to 34. There's less time in the day. It's a very low volatile environment, and people are predicting, or the markets are predicting, that really this is not going to get above 62.25. Now, this is interesting. Skip ahead. Notice that the price of oil actually went higher. All right, oil went higher, but the price of the binary option went lower. This is what I mean when they do not have to move directly in line. It went from 34% all the way down to 20%, even though the price of oil went up. And why is that? We are in a very low volatile environment, and there's very little time left at the end of the day. Now, it's still saying there's a 20% chance that it could pop up above 62.25. In this instance, it didn't, and it just went to zero. But you can see how in a low volatile environment, the binary option will behave a little bit differently than a high volatility environment. Now, I wanted to show this just quickly because that was easy, because it was going down to zero. Above 62.25, same situation, but low volatility, but it never gets below 62.25. It starts out above 50%. It goes higher. Notice how the price of oil went down, and indeed it does, and ultimately it settles at 100. All right, so I went through some examples of extreme volatility and low volatility, both below and above the strike price, above and below the condition. All right, now I do want to talk a little bit about this, because we do at Nadex provide for each underlying market. And remember, today it's going to be about oil and gold, but we do have other underlying markets like Forex, all the major Forex pairs, as well as equity indices, the Dow, the S&P, the NASDAQ. But we will have multiple conditions, multiple strike prices, and we'll have a bunch of different time frames for you to choose from. And if it gets really volatile and the markets are moving around and we need to add conditions on the fly, our market operations team will add additional strike prices if needed. Now, on the left, I just want you to see, here's crude oil, where we've got 2-hour crude oil binary options. We've got daily ones, we've got weekly ones. You can choose the settlement time frame that suits you best. The other thing I want to mention is, in each time frame, there are going to be multiple conditions. In fact, here's the weekly ones. All right, there's 4 days to go. We've got binary options where is oil going to be above 59.25, 60.25, 61.25, 62.25, 63.25. And in each one of these, there's a probability that the market, and you can choose which one you want to trade because it suits your opinion. Okay, and remember, these are all going to either in the end go to 0 or 100. Now, alert, alert, alert. Remember when I said we were going to have an aha moment? I cannot emphasize this enough, and I want to make sure that I got everyone's attention, because this is really important. And this is true when trading binary options, and this is also true when trading call spreads and knockouts. So if you take nothing else away from this, this is absolutely critical. Just because there's an expiration associated with the contract does not mean you have to wait until expiration to see what happens. So let me repeat that. Just because there's an expiration, I chose a 2-hour binary option, I chose a daily binary option, I chose a weekly binary option. Just because there's an expiration does not mean you have to wait to see what happens. You can choose to exit the position early if you want. All right. Now, why would you want to exit a position early? And there's 2 reasons why you would potentially exit a position early. One would be to lock in a profit, and the other would be to minimize losses. So even though you have built-in risk reward. Even though it's going to go to either 100 or to 0, you don't have to wait for it to go to either 100 or 0 in the end. The strategy for some traders is, hey, I want to buy a binary option for 20. I only want to risk $20. That's all I'm going to put into. I can't lose any more than 20. I'd like to make 80. I'd love to see it go to 100. But what if you bought one for 20 early and then at midday, it's right at the money. It's right there. And as we talked about earlier, right then, the binary option might be priced right around 50, right? Because there's a 50-50 chance. You could choose to liquidate your position prior to expiration. You bought it at 20. If you sell it at 50, you would lock in $30 of profit. So you risked 20 to potentially make 80, but you ended up being happy by making 30. You risked 20, you made 30, you made 150% return on your money. Just because there's an expiration associated with the contract does not mean you have to wait until expiration to see what happens. You can choose to exit the position early, and I am going to show you how to do that. Unfortunately, that little hiccup costs us a little bit of time, but I think that's okay because I can probably go a little long. I know my colleague Dan Cook is going to go next, won't mind. All right, now with that, I would like to say, if you've got any questions, you can email customerservice@nadex.com. And I'd suggest following us on social media. Check us out on all our social media channels, and I would really like to focus on the YouTube. If you're not familiar, go to YouTube, look up Nadex, subscribe to our channel. I will tell you every morning we do a market analysis where we talk about potential hotspots in the markets and where you might want to focus, where we might see volatility. So follow us on YouTube. You can certainly check us out there. One last thing I'd like to mention before I start sharing the platform, and we do a quick little demonstration, is we do have a refer a friend program. So if you're currently a customer and you're not taking advantage of this, you can certainly invite your friends. If you invite your friend and they open an account and place 5 trades within 30 days of applying for their account, we'll give you each $100. You can do that for up to 10 friends of yours, in which case you could potentially get $1,000 if you get 10 friends to apply for an account, open it, do 5 trades within the date that they applied for their account. Your friends each get $100 and you get $100 as well. I do like to put that out there. If you don't have a demo environment yet, I would highly recommend that you open a demo account where you can practice this and you can get a little comfortable with how the platform works, as well as with how the products work and how you can trade them. All right, I am going to do a short, unfortunately, and I know Dan, my colleague, is going to cover this as well. So he might get a little bit additional time that I'm not going to get. And then after I do a quick little demo, I will give everyone an opportunity to take a break so that we could step away for a second, get a fresh cup of coffee, and then get ready for the next session. We will take a break between each session. Now, on binary options, I'd just like to share that we've got a variety of different market classes: indices, foreign exchange. We have event contracts, commodities, and we have some different short-term duration contracts. I am going to click on commodities, and I am going to click on, I know I was using oil as an example today. I'm going to click on gold just for fun, just to do something a little bit different. I'm going to bring up a chart of gold. I'm going to hide this now. And now you can customize your chart. You can choose your date range. You can choose the interval if you want 15 minutes or 30 minutes. You could decide. You can use technical indicators. You can drop the technical indicators into your charts. I think I saw some questions earlier around this. We do full-blown analysis of our platform in other sessions, so you can definitely do a deep dive by either looking at one of the previous ones. I think I'm going to be doing another one coming soon. You will find that up on the Nadex website. You can even put in your own drawing tools, whether it's Fibonacci, you want to put in your own support, resistance lines, your trend lines, even channels. It's all customizable. Now, on the chart itself, let's just take a look. I am going to zoom in a little bit, and you'll notice that you have these little different symbols over here. Those are different binary options. Right? If you'd like to see all of those strikes, I can show our strikes. And all right, now you can see, and you can see the different probabilities. Now, I am just going to do a quick example. If I thought gold were going to bounce from here, all right, here it is right now. Gold's currently trading 17.79. Here's a binary option in the next hour and 42 minutes. Do I think it's going to be above 17.81? If I thought that were going to be true, I could buy it. All right, and maybe I just want to buy. I'd only be willing to risk 36. Now, notice when I put my 36 bid in to buy, actually I want to do a little bit lower. Let's do 33. And there's a reason for that. I'm going to place my order. Notice that there's my 33 bid. I'm advertising. Will I necessarily get it? Someone would have to sell it to me. But can I place a bid between the bid and the ask? And the answer is yes. If I buy one at 33, I know the most I could lose is 33. The most I could potentially make would be 67. It's calculated for me on the order ticket. All right. And looks like I actually bought one. Notice down here, it is now in my positions page. Now, why does it look like I'm immediately losing money? Well, it looks like I'm immediately losing money because it's assuming I'm selling at the bid to calculate potential P&L. If I want to, let's just say I bought it at 33 and I'd be happy if it went to 50. Okay, I think it's going to come back up here and I want to sell one at 50 and liquidate my position and make $17 potentially. Can I place an order above the market? I simply click on my order. It's going to say, oh, you want to sell one. But instead of selling, I want to sell it at 50. If it popped up to even money, I'd sell it up at 50. I can place my order up above. All right. And you'll notice now in my order book, I am offering one up at 50. So I can liquidate a position early if now am I going to do so? I don't know. It would have to get up there, but I can place an order to potentially take a profit early if it got up there. And am I going to see my off? And in fact, if I clicked on market depth, you can actually see there's my one lot up at 50. Now, I do want everyone to be aware, this is in a demo environment. This is a great way to practice. Is your experience in a demo environment going to be the same as your experience in a live environment? And the answer is no. And the reason is this is a practice environment. People do all sorts of crazy things. I can't tell you what someone's going to do, but just to show you what someone could potentially do, let's just say I don't think it's going to get above 1787 and I wanted to sell them and I'd sell them at 30. Someone might actually say, good, I'll sell 200 of these at 30. I could lose $14,000. I can make $6,000, and I can, you know what? I can't even do that because it won't let me. It won't let me do that because I don't have in my demo account. I couldn't lose that much. So let's just put this down at 100. Now I can notice how my available balance is 12,000. I could do something crazy. All right. Notice my available balance just disappeared. And I've got this crazy order. People won't do that in a live environment unless they really wanted to do that trade. In a demo environment, people do all sorts of crazy things. So I am actually going to delete that order just because I don't want to mess up the demo environment. Okay, I do have to stop here on this particular session. Hopefully you really understood binary options, how it's these contracts. If you think it's going to settle higher than that strike, you buy it. If it's going to be lower, you sell it. You can trade out of these throughout the day. You can buy them, you can sell them. You do not have to wait until expiration. And they're contracts designed specifically for retail traders. All right, we are going to take a break right now.